We're going to do a little bit of a market update. We do this every seminar. The numbers that we want to zero in are on the right side of this page here. Just let me move this. So what I highlighted there is the total sales, new listings, and active listings. And what you see in April now is very, very large decreases, minus 28, minus 35, and minus 30. But we're starting to see that trend in the right way. The first 3 months of the year, those numbers were over 40% in the negative. So sales were down year over year, over 40%. Listings were down over 40%. And the active listings, new listings was down more than 40%, as well as the active listings. So what we're seeing is a trend is the market is starting to shift toward balance. Now, it might take another 6 months to get there, but we're starting to see it change.
Yeah, and so these markets, Tim, they're always changing. And for people out there that are wondering if they're going to take action, we can tell you in the biggest downturn we had since we've been investing was the financial crisis in 2008. And the market, we know this because we owned over 25 houses and we were stuck in that market. The market shifted 10%. It went down 10% over a 16-month period. So it lasted a while, but markets change. And last year in COVID, Tim, how long did that uptick last? When COVID was going on there, it only lasted 4 or 5 months. We were absolutely crazy. And then right now we're still in this craziness where the properties are coming on. So what's happening now with these numbers, to break it down, is that we're starting to get into the spring market a little bit. More properties are coming on and then they're selling straight away. So when you see that, we know this. So you can't, if you are getting in the market, you can't waste any time, but we still have the problem. Like I got a phone call today from Craig, who we sold in Aspen. We sold his house. He sold it to him, I think, just over $1 million.
Just under $1 million.
Yeah. Tim sold it last year just under $1 million. Then we went and bought him another house for 1.2 or something. That house that he went and bought is probably worth 1.5 right now because it's got a triple car garage and it's a walkout and it's bigger and it's right in the middle of Aspen. It was an upgrade. And he was like, Azad, I could probably make 250, 300,000 off my house right now. And I said, but where are you going to go? Like, where are you going to go? And he kind of realized, oh yeah. I said, the problem is you can't go out there and find that dream house with all those tick marks that he wanted, right now. So that is the dilemma for sellers out there and buyers, that they just can't find those properties and snap into one straight away, right?
Yeah, and the two numbers in the bottom right-hand corner that I've got highlighted is the median price and the average price. And what we're seeing is since the beginning of the year, they were increasing a little bit. They were mostly flat, but now we're starting to see, almost 4% increase in the average price year over year, almost 3% the median price. We're seeing prices start to pick up, and it's really the beginnings of a normal spring market. If more and more listings come on, we're going to see those prices may flatten out 5-6%. But if we don't see enough inventory come on, those prices are going to continue to go up. And this is a problem that we've been talking about in Calgary, is too much immigration, too many people coming to the city from other parts of the country, not enough housing. Mm-hmm. So, it's a basic supply and demand equation here. And if we don't get enough supply and we have too much demand, our prices are only going to rise.
Yeah.
Okay, so normally at this point in the seminar, we have our mortgage specialist, Danielle DeMarco, come on. She was very, very busy today, so she probably won't make it. But what we can do is we can toot her horn a little bit. Danielle is our go-to real estate investment mortgage broker.
Yeah, Danielle, as we were saying, does amazing things for our clients. And actually, she just doesn't get you a mortgage. She actually gets a plan for you, so you can understand where you're going with your investment journey. And we love it because we get the plan, our crew real estate plan together for our clients, and there's no surprises, right? And so what we want to talk about, what Danielle does for our clients, is a little mechanism called mortgage plus improvements. And we thought that would be appropriate for people wanting to do flips that don't have a lot of cash. And that's the thing about investing, when you go to flipping, it's cash intensive, right, Tim? So if you can find a way to get the money back in your pocket, it's very useful. So what we've been doing for our clients for a number of projects, Tim, it could be legalizing basement suites, it could be just doing straight up rentals, is when we buy the property, and it's a little tricky on our end, Tim, because there's a process. We have to take our contractor into the property to actually give us a quote on the work that we want to do. And Mortgage Plus Improvements, what we actually do is we actually apply for, on average, Tim, it's around 10% of the purchase price. So if we're buying for 400,000, we know the banks will give us up to $40,000 to use towards our renovation. So what we do is we go in during the conditional period and we work out what it would cost to either put a new kitchen in or whatever's the most important thing to do. If it's suiting the basement, turning it into a legal suite, we will get all of those costs up front and we would submit it to Danielle, and Danielle would go to her lender and apply for Mortgage Plus Improvements before the condition date. So we know when we go to move conditions that we're going to get $40,000 back from the lender once the work is completed. Now, there is a catch. You do have to come up with the money to do the renovations up front. There is a way around that. I know our contractors will basically use
if they know that you're getting Mortgage Plus Improvements, they will take a deposit. So that they can get their full payment when the bank, forwards you the funds.
Yeah, exactly. So we work together with the contractor, with the investor, with Danielle, the lender, the lawyers, and then that money, once the work's done, the bank will send an appraiser back out to the property to make sure. We've even done garages. Tim, Nico did a garage with this. They'll come out, assess the property, make sure that the work was done, and then they'll release those funds. So now you're not borrowing on 400,000, you're borrowing on 440,000, which, puts that money back in your pocket so you can go and, put a deposit on another property or do another project. So there's multiple ways of funding your
some people will use a line of credit, they'll use a HELOC on another property to fund the renovation. Some people will, there's a Home Depot credit card that you can apply for that is interest free for the first 12 months. You can do that, so you're really financing it with a credit card. There's many ways to come up with that cash to fund that. Once you do put an offer in, we help you figure out that process as well.
And then Tim, the last method is getting hard money, which we only go towards for our experienced investors, which, you have to have thick skin if you're going to do that, and you have to know what you're doing.
Okay, so that's our market update for this week.